Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. This episode of Money Never Sleeps is sponsored by Pat Fintech, a training partner that demystifies fintech and digital finance for financial services professionals. Owen Fitzgerald and I are back with another Money Talk segment this week, featuring a motherlode of fintech hotspots, starting with insights into Revolut's latest $33 billion valuation, Square's new open developer platform focused on Bitcoin and their move into business banking. Then we dive deep into the upcoming Robinhood IPO and leap from there into our developing thesis on Fintech Flywheels. All right here on Money Never Sleeps. Hey, how you doing, pal?
Good, and you?
Good. Is it hot enough for you?
Jesus, I'm still sweating at this time of night. It's too warm.
I love asking that question. It's the most meaningless question you could ask anybody.
Yeah.
Another one for you that is particularly Irish. What do you call a yellow courgette?
Yellow courgette? I don't know.
Have you seen a yellow courgette?
No. I don't even know what a normal colored courgette looks like. So
like a zucchini?
No, I don't know what that is. I've heard
that
word.
A cousin of a cucumber.
Okay.
Yeah, no. Anyway, my wife asked me, said, what is this? I said, it's not a yellow courgette. It's summer squash. You ever heard of summer squash?
No.
Yeah, that's what we called it.
Butternut squash. Is that the same thing, no?
Different thing.
Different thing. Okay, no.
Different thing altogether.
Shows what I know.
Important to figure these things out late at night. But listen, there's a motherlode of stuff going on in the last 10 days or so in fintech. One out of every $5 invested in venture capital I think in Q1 this year was in fintech. One out of every $5 invested in venture capital was in fintech. Amazing. And being gone for 5 days away from everything, 7 days away from everything last week. Clydagh Duff is a hidden gem out there in Western Galway. I was deleting everything, wasn't reading the news, nothing. And then I came back and I was like, I don't think I missed all that much, but it's just the last few days.
Yeah.
So first one for tonight, Revolut's massive raise. So they confirmed a fresh $800 million in funding at a $33 billion valuation to supercharge its financial services super app. And I think the jury's still out on whether it's a super app or not. Amazing numbers here being thrown around. The Revolut valuation is 100 times their 2020 revenue, right? So if you remember from when we picked it apart last time, I think that their 2020 revenue was somewhere around 360 million. So yes, doing the math that is easy enough to do, it's 100x, which is a big markup. And they still only have a Lithuanian banking license, albeit passportable across the EU, which is fine, and an e-money license in the UK. I think some folks are saying maybe that's better that they aren't a bank, like Monzo, moved into heavily regulated, heavily compliance-oriented operations for their business, which Tom Blomfeld just didn't like anymore. So the Series E was co-led by SoftBank Vision Fund and Tiger Global, no other backers, right? This harks back.
You don't need anyone else when you have those two putting money in.
You don't. And that harks back to Chamath's gross tonnage of dollars comment that, these big private equity firms are just taking big bets late stages because they know they'll get, 8 to 10x when it goes public, right? So one thing that I saw Simon Taylor mention, thank you, Simon. Remember we talked about 88% of the 2020 revenues came from the UK?
Yeah.
He pointed out that that's only because pre-Brexit, everyone was using the UK entity, or most were using the UK entity
they were booked through.
Europe.
Yeah.
Post-Brexit, everyone had to be, who was in continental Europe or within the EU member state, had to be cordoned off to the Lithuanian banking license rather than the UK e-money license. So those numbers are a bit distorted, right? So all the countries where their customers weren't being counted in those countries for Revolut revenues because they were all part of the UK entity, which was interesting. Final observation from me, or maybe not the final observation from me, but one other comparison was to Nubank, and Lex Sokolin posted this up in his FinTech Blueprint newsletter just yesterday, the day before, I think.
Yep.
This is guy, Juan Gabriel, all in Juan. Great Twitter handle, love that. Consider this valuation gap. Revolut, valuation 33 billion, like we just mentioned. Customers, 14.5 million, now actually I think about 16 million. Revenue, 360 million. Tee that up against Nubank, similar valuation, 33 billion to 30 billion for Nubank. Customers, big difference. So again, Revolut's 15, 16 million. Nubank have 40 million customers. Revenue for Revolut, again, 360 million. Revenue for Nubank, 963 million. So 600 million difference.
Yeah.
So imperfect comparison, but what's driving this valuation difference? Do you know?
Do I know? No, but I would guess it's related to the market. And whilst Nubank is clearly massive, I don't think that many people will be able to say that they know much about it, because it's just entirely focused on Latin America and some integration into kind of the southern part of the US. But that's its focus. You know, there was a great podcast with the founder. Oh, I'll find it and I'll put it in the
Invest
show
Like the
notes.
Best.
Yes, it
Patrick
was.
O'Shaughnessy,
That was the one.
and the founder, David Velez.
Yeah, and it was
Who I
fantastic talking about the story. He talked at one point about, I think, whereby people couldn't even open like Netflix accounts, and you know, Netflix accounts are being sold on the kind of black market almost, because you had to have a card, and the majority of people in the country don't have cards for credit reasons.
Yeah, I think we should do a deep dive into
dive on
Nubank
Nubank,
an
yeah.
upcoming episode. I think we should.
Yeah.
I have some further insights from a friend I was speaking with today on Nubank specifically. So,
because I think like Berkshire Hathaway is in there. You know,
They
like,
are?
You know, they're not a small player. They're huge, but they're not really known or referenced outside of Latin America.
Yep, because they're in Brazil, Colombia, and Mexico.
Yeah.
And that's about it.
Like, I mean,
So-
we're talking about 40 million customers from, you know, one continent without having to go any further than that. And obviously Revolut are trying to expand across multiple jurisdictions. But yeah, and I think it's just, you know, it's a European US kind of valuation and view of the world. And I think that's where that's coming from.
Absolutely. It's going to be interesting to see where they might expand, though, because they are doing lending. Really interesting that Nubank does lending using as part of their own internal credit score. Who referred them, right? And they found that to be an unusually accurate view of someone's credit risk is who referred you to Nubank.
That's interesting.
Yeah. So Patrick O'Shaughnessy was quite interested in that.
Yeah.
Back to Revolut.
Yep.
So another interesting article. This was just in Sifted today, that Revolut is a required study for any student of disruptive innovation. What they're basically saying was that Revolut started with something that nobody was a huge fan of, right? And they did it at low cost, which is FX, and being able to be this travel card. And then they built this wedge, got into the market, and expanded with additional services, right? Classic, disruptive innovation study. Now, I've been thinking about this from the perspective of how could they get that big, right? How could they get from where they are right now, which is 15, 16 million customers, into the upper echelons, right? Yeah. So I've also been listening to this other podcast, believe it or not, What Bitcoin Did, which is Peter McCormick. He's just brilliant. Yeah. He's got a good friend called Jack Mahler. And Jack Mahler is a 27-year-old CEO, founder of Strike. Not the Irish Strike with our friends Ollie and Charles, shout out to those guys, but it is the American Strike. And what Strike are doing is that they are building Bitcoin transfers over the Lightning Network and allowing you to basically fee-free, because the Lightning Network allows you to move Bitcoin a lot faster, right? It's the speed of lightning. And it's one of these layer 2 solutions that sits on top of Bitcoin. Anyway, so you could send money instantly anywhere in the world with no added fees, both fiat and crypto. And he talks about getting Strike to the level of Facebook. And in this rant he goes on, he F-bombs anybody in the crypto industry that is charging a fee for transactions. And he said, you shouldn't have to do that. Why can't you be as big as Facebook, right? The Facebook product is free. You don't pay for it. But as we know, if you're not paying for a product, you are the product, right? Yeah. So what I think they're doing, Strike are doing, and I will bring this back to Revolut in a minute. I absolutely will.
Yeah.
Is that I think they're probably dangling this low, no-fee service to get into the debit card space, which they have is coming soon on their website. Now, the interchange when you are offering card services in Europe is about 30 bips. That's the interchange revenue. In the US, it is closer to 2%. It's a huge, huge difference. That's why you have all these loyalty programs from card providers in the US, because they can give that interchange away towards the loyalty programs. In Europe, you don't see many loyalty programs at all. Frequent flyers, you don't, right? So Strike, could they, because they have that coming soon on their website for the card, looking at that 2% huge interchange, looking at the opportunity to bring on a bunch of volume with no fee crypto transfers, and then start getting people to spend their fiat or perhaps spend their crypto even through some of these bridges that MasterCard and Visa are building so that they can get that 2% interchange. That what they built from a platform perspective is on top of Lightning, which is on top of Bitcoin for very, very low infrastructure cost. So what I'm thinking is that Revolut, as we talked about, targeting the US, we know they're going to have a really hard time up against Chime, up against Venmo, up against you name it, that already have significant coverage of the market. But could Revolut, are they looking at the US market and saying, well, if we built a successful platform in Europe based upon 30 bips of interchange, what the heck do you think we could do in the US if it's 2% interchange? Right? That is a big, big opportunity there. Now, we know they're going to have a really hard time with the competition in the US and without having that real differentiating product. But I think looking into how Strike may be making money, but I think the interchange, that may be what they're going after. Revolut could go after that, obviously. They are by opening up or trying to open up a US banking license, but still getting from 16 million users up to what Jack Mahler is talking about, 1 billion monthly active users on Instagram, 2.5 billion monthly active users on Facebook, getting up to that level without charging anybody any fees, just like those do. Only comparison we have is WeChat Pay in Asia or China, which is about 900 million monthly active users. To get into that super app territory, you kind of have to go from 16 million up to a heck of a lot more users.
Yeah, look, it's an interesting one because if you compare them to Robinhood, which we'll be on to later, even Chime in the US, who's a competitor, or Tinkoff, like they don't even, at the moment, Revolut don't even have one core profitable piece of the business. You know, they don't have one bit that the whole business hangs on at the moment. Like interchange fees, I think was the largest percentage of their total revenue at the moment. And then, you know, there's the cost of them not being a bank. You know, the fact that they have to hold all their customer deposits at regulated banks themselves. So I think there's a lot more to go, but I do think they'll need to build out one core product or one core area of focus. Because it's interesting, I was reading something today. Like they launched obviously in 2015 with 2 products. They're up to 20 now, or 20 by this count here at the end of last year, which is way more than I thought they had. And some of those are business, obviously. But, you know, what they may or start trying to do is go down the Square route where they connect their retail and business customers together. They have about 500,000 business customers to allow them to interact directly. You know, that's an avenue. There was a really interesting comment from the CEO of Tinkoff recently. And he said, you know, their model is not a light model where you skim off a few 100,000 customers in 20 different markets. That's not the approach they're taking. And he was directly talking about Revolut there. Okay. You know, you're talking, to your point, like we're talking about large volumes of customers. And I think they're going to have a few core products that are really going to drive that.
Yeah. Now, I mean, their valuation is what it is. I don't know what their next step is in terms of thinking about IPO or direct listing, but I'm not saying they need to go from 16 million to close to $1 billion because it's a different thing. On Facebook and on Instagram, the currency is likes and followers, right? And it's that dopamine hit that you get when you get likes and followers. And trusting somebody like Facebook or Instagram with your data. When it's your money, it's your money, right? And that's a different relationship that you have. You have the different relationship with your own privacy and your own data than you do with your own money. I don't know if in the West we could get the number of users into one of these financial super apps that you need in order to make this a significantly profitable enterprise. Right? I'm just not seeing it yet with the product set that they have right now. I think they could probably do a lot more, but you know, you look at WeChat Pay, I mean, that is an entire ecosystem. Exactly. WeChat itself is an entire ecosystem with all these different kinds of apps, with messaging, with everything. It's all so intertwined and interconnected.
But also built from a messaging app. That way, it built its user base. So it would be an equivalent of WhatsApp becoming a bank and offering financial services, you know, and they obviously have the scale of users. Because Revolut's challenge will probably be that they, on one hand, they won't want to be a bank. or they won't want to appear to be a full bank, because even from a valuation point of view, I mean, the valuation and the growth still has to keep coming. I think if you were to take their current valuation based on this round is at 74 times last year's revenue.
Mm-hmm.
When you compare it to NatWest, which has a similar number of customers, NatWest is valued at 2.3 times revenue,
Wow.
So they need to stay in the fintech space and in the consumer exciting space, as opposed to really pushing the bank side of it, because it's very different, even optically, in terms of the message they're trying to push. So really, there's going to be a need for more products, but there's probably going to be a need for more features and functionality that's outside of financial services.
Yeah, I've been thinking more and more about the flywheel and the Fintech Flywheel and Revolut, of course.
Well, do you know what? One interesting point, and we can finish up on it, is that nearly a third of their revenue is from subscriptions.
There you go. Brundles.
Yeah. So I thought that was interesting, because I didn't see it reported anyway. I read something about it today. But that's sustainable, or that's something to build around, would be my view. Different price points depending on the different products that you're getting, but those products will need to be more than financial services. You have a core base of subscribers getting different product, and then depending on what they're paying for, they're getting different product, but different functionality on top of that then as well.
Yeah. I can feel this whole thesis around flywheels. Just we're getting that one nailed. That chat I did with Sophie Guilbeault's crowd. Shout out to Sophie on Beyond Fintech on Clubhouse. Really was therapeutic for me, because I put it all out there, and I got some really hard questions back. Talking about a fintech flywheel, and one individual who was incredibly helpful basically said, listen, the Disney flywheel, that there's so much emotion tied into that.
Yep.
Right. And I said, well, emotion and psychology around money is an interesting thing, and it can be quite different. And I think for Revolut to get that flywheel, that momentum, self-sustaining flow around and around, and each time, each revolution of the flywheel, that disc gets a little fatter and fatter, right? It's going to be about a lot more than just, hey, same products, build out that product base a little bit, move that to another country, build out that a little bit, move to another country. I just don't see that yet. There's going to be something else there. And we've talked about travel apps that they might acquire, messaging. I think that's onto something. We're going to be able to draw this out. I'll take the lead on that.
Yeah.
Good. All right. Next, Square. Jack Dorsey, who, by the way, is looking more and more these days like the old Luke Skywalker on The Last Jedi. Absolutely. So, Square is creating a new Bitcoin platform for financial services. And this is reported by CoinDesk, but NASDAQ also reported it. And they talked about DeFi, and they talked about all these other things. But Jack on Twitter said, to quote him, Square is creating a new business, joining Seller, Cash App, and Tidal, focused on building an open developer platform with the sole goal of making it easy to create non-custodial, keyword, non-custodial, permissionless, and decentralized financial services. Our primary focus is Bitcoin. Its name is TBD. Very interesting name, TBD. To be determined, to be whatever. Yeah. Like our new Bitcoin hardware wallet, we're going to do this completely in the open roadmap, open development, open source. Brock is leading and building this team. We have some ideas around the initial platform primitives we want to build. Okay. So where this one is going for me is, like I said, non-custodial is the key word here. The difference between custodial and non-custodial wallets, right? A good example of a non-custodial wallet is the Ledger Nano. It looks like a thumb drive, right? That's probably is one of the most well-known ones, and most widely used one is the Ledger hardware wallet. And you store your crypto on that wallet. And if that wallet is gone, if that Ledger Nano little device is gone, your crypto's gone. Yeah. Right? You have control of your private key as well as your public key. When it's a custodial wallet, like say a Coinbase, your public key is known, and you can share that with folks so that you can receive crypto from other parties. And you also obviously use that address as an exit point for sending crypto to other parties. But your private key is only held by Coinbase. Right? Yep. So that is a custodial wallet. And the difference between the two is that you are charged a fee, obviously, for transactions related to those being held in your custodial wallet. In a non-custodial wallet like a Ledger Nano, you're free to just move that onto a desktop wallet and away you go, right? Yep. So the difference is that it's all about security and risk, is that if it's non-custodial, you hold it yourself, you have complete responsibility, but no keys, no crypto, it's gone, right?
Yeah.
On a custodial wallet, someone else is holding that for you. So Jack being I won't call him a libertarian, but Jack being the free thinker that he is saying, listen, people should just be able to move value, move crypto, move money any which way they want. And we're going to enable them to do that. So doing it as Square, I think, versus doing it as a small scale startup, I think those are two different things.
Yeah.
Right? So I think this one could be interesting.
Yeah, and look, do you know what? I think, and thanks for clarifying the custodial, non-custodial. I didn't really know the difference myself. But actually, I think this ties back to what we talked about when we were recently when we were talking about the Square and Tidal deal. And I think what they're making a play on here is the kind of creator economy. Because when we looked at that deal, it was on the basis that they were going to give financial services to creators, artists, singers, musicians, whatever. And I think that by the sounds of things, this could be an extension of that. It's giving people the full control over their financial life and the financial services, their financial products, everything that they want, to give them full ownership of it. But specifically playing on that, the unbanked, inverted commas, who don't have the ability to get access to financial services, but then people who want that full control over the financial services as well.
Yeah. I was talking to I won't call him a billionaire, but I'll call him at least 100 millionaire today. And I said something to the effect of, hey, with crypto, there appears to be a global crackdown going on in terms of the regulatory view on this. I said, the bigger crypto players all know that this is coming. Most of them are, somewhat, if not heavily regulated already and are embracing that. And just, it's coming. So let's just deal with that, right? And he was like, no, I don't want to. If I've got my own wealth, I just want to be free to do with it what I want. I want to be free to send it to whomever I want. I'm a good person. I'm not laundering any money. I'm not, doing any illegal stuff with it, should we say. Yeah. And he's like, I don't see the point of it, specifically when it comes to non-custodial wallets, where it's basically the equivalent of you walking around with a fat wad of cash in your back pocket. Right now, that back pocket would be zippered up, perhaps with a little lock. But that's what we're talking about here. He said, listen, this is my money. I hold it in crypto. I may hold it in Bitcoin. I may hold it in USDC, like a stable coin, no volatility, whatever. It's pegged to the dollar. I just want to be free to do with it what I want. Now, we've talked about Jack Dorsey quite a bit, and I feel like at least have done somewhat of a, psychological profile on him over the years. You and I are talking about him, Eoin. I totally expect this from him to be of the similar mindset of this 100 millionaire that I was speaking with today. Yeah. I do like where Square is going overall. Yeah. Right. Coming into this with the beginnings of their initial hardware just for small businesses to be able to make accepting payments easier, moving into Cash App, and enabling peer-to-peer cash transfers, very simple. The crypto side that they're doing now also today, as you know, they mentioned their business banking approach that they're taking as well. And I think that ties in nicely, like you said, with that creator economy side of things, where it's just so goddamn hard to get a bank account. Another thought, what's really hard is for any crypto businesses, aside from the biggest players, but any of the crypto businesses to get bank accounts. Yeah. Right? So maybe that's a nice little play there by Square
going
to
after
help
that market,
with their business banking account to help these crypto players get bank accounts.
And look, I agree with everything you've said there. I think the challenge with that approach is going to be the regulators. Because even to your 100 millionaire example, where's the tax being paid on what he's doing or how he's earning his money? Once he's not, no, but I mean, once he's a nice guy and not laundering money or anything like that. At the same time, there'll be a need or a push for some element of control and oversight on it. And how do you marry the two worlds then?
Yeah. I mean, I do like where Square is going. I think there's a lot of runway left for them with their product development roadmap. Absolutely.
Oh, hugely. Yeah. And, they're ramping out products. And even, so their SMB banking offering now has checking and savings, loans, and payroll solutions within it. And even, I'm looking at some stats here, small to medium businesses are about 48% of US GDP, employing 60 million people. And then they're saying, I think McKinsey have it estimated at about 90 to 100 billion kind of revenue across lending and deposits for those sort of companies. So it's a huge market in the US alone to tap into. And I see even I don't know if you have it up your way, but I've noticed a huge amount of billboards around Ireland, down this direction anyway, in Kildare, as I've been driving all Square, and there's been a number of kind of ads on the TV lately about Square and their solution for SMEs here and their Square card and everything. So obviously a big push in that market. And like I said, once they start connecting up the dots with that and some of the stuff they're doing on the crypto and the hardware space, then, I think they're in a really strong position to be front running a lot of that product development and those cool products that are being rolled out.
Yeah. And like Jack keeps saying that if he wasn't doing Twitter and Square, he'd be working on Bitcoin. So he's all in, but he has this responsibility as CEO of Twitter and Square to run those businesses to the best of his ability. Right. And he can't just say, well, screw that, I'm going to go work on Bitcoin. So, really interesting product development innovation comes from the perch he has.
Yeah.
All right. And the whole mindset around that. It's fascinating. This episode of Money Never Sleeps is sponsored by Pat Fintech, demystifying fintech and digital finance for financial services professionals. Pat Fintech enable financial services professionals to transform their capabilities into the digital age with dedicated virtual training programs geared towards those that can develop, deliver, and monitor optimally customized user experiences balanced by appropriate governance, control, and oversight. To learn more about Pat Fintech, go to moneyneversleeps.ie/PAT-Fintech. Next one. The Robinhood IPO.
Yes.
Right? When I looked at this today, and I was not surprised, but just a bit, okay, I got to go find some good news about this. And I couldn't find it. I found plenty of objective articles that were not even objective, just fact reporting articles. But the one that I really dug into was the one that was quite negative, which was in Forbes. David Traynor said Robinhood IPO, still a bad bet for investors with alarming risk. So the facts are Robinhood Markets, Inc., symbol hood, I love that, Boys in the Hood, right, is expected to debut as a public company on July 29, 2021, next week, at an expected IPO valuation of roughly $35 billion. Very close to Revolut, very close to Nubank, similarly enough. Neither one of those companies are going public. Well, Nubank might next year is what they're talking about. Maybe Robinhood could have waited a year. We'll see, but I'll come back to that. And this guy, David Traynor, says Robinhood earns an unattractive rating from me, right? From him, not me. So what he said as well is that with Robinhood's expected valuation of $35 billion, investors may have better odds of making money by trading risky meme stocks using Robinhood's platform than by purchasing Robinhood's overpriced stock itself. So he went on a rant about payment for order flow, which is the main way that Robinhood makes money. They take your order. Like you said, if you're not paying for the product, you are the product, right? So they take your trades, basically, and those of others and aggregate them and sell them off. And, the bigger execution shops get the fees on the execution side, okay? So what he was also saying is that they don't have the scale to offer free trading without the pay for order flow, but Fidelity and Schwab do because of their scale and things like asset management. I was saying that to someone earlier today. Yeah. Right? Like I get free trading with Fidelity because I've had my 401k with them for yonks. And they're not just giving it to me for free because of the 401k account. They're giving it to me because, their asset management business is making squillions and they hence don't need to charge me for these little piddly trades, right? And it come up with some other interesting numbers as well around, some calculations on growth and what they're going to need to achieve. I thought it was, again, incredibly negative. I found some interesting, somewhat positive guesses on where they may be going, but what's your take on this, Eoin?
There seems to be two sides to it. There's the, looking at it from a pure kind of business point of view, I think they're up 245% on revenue from last year. They made 550 million Q1. They've 17.7 million monthly users, 7.5 million daily active users. Like the numbers are massive. Over 50% of their investors are first-time investors. They've 81 billion of assets under custody, they call it. And they're making about an average of kind of $137 revenue per user, which far exceeds a lot of the kind of neobanks, if you were to compare them on that basis. But then, the flip side of the numbers then is it's more a moral question. And obviously, they were waiting to IPO since last year because of the fines that they were waiting to be handed out from the SEC, the 70 million that they announced their IPO run the day after that fine got settled, $70 million for failing to protect customers,
Yep.
And then even on the revenue numbers, 17% of the revenue from crypto, but a third of, or what ended up being 5% of total revenue was from Dogecoin.
Yep.
So there seems to be an element of a moral view that what they're doing is wrong, and even with payment for order flow, and they're not getting the best price for the customer, they're getting the best value for themselves, that sort of thing. But at the same time, and we're both working with companies in the broader investing space targeting the US market, it seems like the world has kind of shifted, and everyone that kind of piled in as new millennials or younger retail investors are here to stay. It wasn't just a blip whilst all the sports betting and everything was closed. So, you could argue that possibly that if it stays like that and they are then able to add on additional products and bring in more of the wealth of those people as they grow then, on their journey as people, there's potentially more. You're talking about the likes of Fidelity, they do the asset management, the wealth management stuff. If Robinhood started doing that, and if you take a different analogy or a different comparison to the likes of Stripe, where they talk about the GDP of the internet and they want to work with startups and grow with them as they scale, the 17 million customers that they have are not going to Fidelity. They're not going to Charles Schwab, they're going to Robinhood, and they'll probably keep their money at Robinhood. So do they start offering longer term products and enticing people into that space that would maybe then leave the likes of Charles Schwab or Fidelity? Maybe that's an angle for them.
Yeah, like who are the Chime users that have accounts at Charles Schwab? Right?
Exactly.
I don't know if that's that's a finger in the air sales strategy, but start looking at these demographics to see how you can combine things and the opportunities that were pointed out in the S1. I had a quick look at that. They talked about the cards market, right?
Yep.
And just like we talked about with Strike and with Revolut, looking at the US market and that 2% fat interchange, 1.7 to 2%. Big revenue opportunity there. So they said that is a big opportunity in general. So is that a hint that they're going after that next, the cards market? Also peer-to-peer and micropayments, right? Yep. So Square, Venmo, same idea. From their single money app is what they're talking about. They also mentioned international expansion, but with no timeline. I think they were trying to get into the UK market and then they pulled out, right?
Yeah.
And said they'll come back after they sort out things at home, which was, I think we talked about that last year.
And the interesting thing is, and I think it's really, it plays into their business model and even their approach, is that they're keeping up to 35% of the shares for the IPO for customers. Mm-hmm. And giving them early access. So I'd expect there'd be a sizable pop on day one for Robinhood on that basis. Whereas I know the view tends to be quite negative with all the more serious, financial correspondence and the articles that you read, but I actually expect it'll go the other way and it'll be quite a pop because, the almost rabid kind of fan base that they have and user base will want to see it do well and feel like they're a piece of it. And I think that's going to make it shoot up. So that's not financial advice.
Yeah, no, it's not. But that is going to be interesting, seeing the Coinbase direct listing and how that behaved in the markets on day one and versus an IPO, right? And kind of seeing how that would respond. But also then, now, yes, an IPO where 35% go to customers, right? Yeah. It's going to be really interesting to see how that unfolds.
I just think, like I said, I think the view of the world and the engagement now, Robinhood set out to democratize finance and bring investing to the masses. They're doing that, but with a very different approach and a very different mindset to the traditional players. So who's there as their competitor? Well, it's probably not really Charles Schwab or Fidelity.
No, it's not.
They're playing in a different space. They're in the Revolut space.
They're getting the money. They're getting the money that Fidelity can't.
Yeah, exactly.
Right? Because
and would never get. So.
There's a barrier to that kind of, you wouldn't, because it's a different, I love the Fidelity app, but compared to the Robinhood app, it's night and day.
Yeah.
Right. And there is a demographic that would just prefer to use the Robinhood app than a Fidelity app, exploding bubbles or balloons and all, you know. So the positive thing I drew out of the S1, and this was just, again, call it a swag or call it an educated guess, was they went into a bit of detail around their technology platform and why that was such an asset for them. And I think like Ann Bowden from Starling hinted at in a podcast episode she did with Simon Taylor from 11FS, along with Angela Strange from A16Z.
Yeah.
She said, listen, we kind of figured out that we've built this considerable asset for our business in this technology platform. Might there be an opportunity to enable others to use it? Same way that a little business called Amazon pulled AWS out of a hat, right? And that completely changed the landscape of technology as we know it, right? And the ability to build a technology business. And I'm reading right now The Everything Store by Brad Stone.
Oh, it's brilliant.
Which
I
is,
have it.
Yeah, amazing book. And Flywheel is mentioned in that as well, the Amazon Flywheel. So that will go into this thesis. And I wonder if Robinhood could cordon off their platform and apply it, not necessarily enable others to do exactly what Robinhood are doing, but there needs to be some type of value proposition in there with the algorithms, with the machine learning and everything they're doing in there that could be packageable and reusable, and that they're creating a completely different and diversified revenue flow for themselves. I wonder if they're thinking that.
Yeah, possibly. There's definitely a lot of learning that they'd have that could be of use. Coming on to your flywheel bit, and I had this noted down to bring into this conversation. I don't know if you're familiar with Robinhood Snacks, which is their daily newsletter.
Yes.
Yeah. How many, I don't know if you saw it, you probably saw it in the S1. How many monthly subscribers have they got?
I don't know.
32 million.
32 million subscribers.
32 million subscribers to their daily newsletter. And their podcast had 40 million downloads last year.
Holy.
Yeah.
Holy moly.
Exactly. That was exactly my thought, because you talk about a captive audience and you're talking about a flywheel and the emotion earlier. Like the target market here is very invested in the business and they're big fans of it and they get behind everything and they do things in crowds like the Wall Street Bet stuff that we saw earlier in the year.
Mm-hmm.
You know, they're the type of people that can really move the needle depending on, with a customer base like that, 17 million monthly users, you've 32 million subscribers to your daily newsletter. Like, you know, there's a lot of scope to do something really interesting there or to do it at volume. You know, we talked about Facebook and integrating payments into WhatsApp because they have 300 million users in India. You know, it's automatic scale. There's certainly interesting angles to be explored on that basis. And similarly, like going back to the Revolut example earlier, where they've a third of their business coming from subscriptions, you know, there's something core there that you could really build out on that would be very different to what's being offered by the others.
I'm thinking like the gamer YouTube channels, right?
Yeah.
Where you can just watch somebody playing Fortnite or watch somebody playing Roblox or whatever.
Yeah.
Could you watch somebody day trading on Robinhood?
Would you want to?
No, but I mean, it depends
Absolutely. I'm sure
like-
there's people that would. Sorry.
like Portnoy.
Yeah,
Portnoy.
the David Day trader. Obviously, that's what he was doing, and he had a huge following doing that. And could you bring that in-house? Like, it's as much an entertainment play as it is a financial services play.
It's kind of a bit sick and twisted, though, a little bit, because this is
little
people's
bit.
money and people's livelihoods,
Yeah.
right? But and I'm saying that myself voluntarily, that it is, but you're the one who said unethical or immoral at the beginning, right?
No, but in fairness, and yeah,
Only invest what you can afford to lose.
I completely agree. But they try to acknowledge that view of them by rolling out Robinhood Learn, which is their financial services education platform. Now, the interesting thing with that was in the S1 is that it's 7 million, not subscribers, but users or people who look at the content in there. So,
Wow.
like, you know, this is big scale stuff, and there's a couple of different ways I think it can go.
Well, we've seen Packy McCormick from Not Boring, right? He's up to something like 60,000 subscribers on his newsletter.
Yep.
And he has the Not Boring Syndicate, right? So you take that audience, you monetize it.
Yep.
Harry Stebbings from the 20-Minute VC podcast turned venture capitalist, right? So there is this monetization opportunity from audiences. Can you go the reverse way, which is basic product, create a community around that, and then monetize that community to do more, which drives more into your basic product? Which, I think we're onto a flyer.
Yeah, but I think there's a couple of things
I
that
think
we'll come back to,
It's the crossover, because Disney, you've got a huge amount of Disney fans and they're mad about this stuff. And yeah, they do watch the movie. They want to go to the theme park and they want to buy the merch.
Yep.
And then they want to go watch the movie again, right? And you go on to Robinhood, you use the app, you're excited about doing it. You read Robinhood Snacks when it comes out. It makes you go back to do it. It makes you share more and tell other people. I think there's this digital online community that is part of this fintech flywheel that I think is going to be quite important to how it develops.
Yep.
Awesome.
There we go.
All right. A couple other stories. I couldn't not mention this just because in the wake of Revolut's big valuation, but FTX, the crypto derivatives exchange, Sam Bankman-Fried, billionaire at the age of 27, raised $900 million at an $18 billion valuation.
Wow.
Largest private round in crypto industry's history. Forbes reported that today. Thanks to Gray Webb at Liquibit, we had on the show a few weeks ago, for pointing that out to me today.
Okay.
Because I had missed it. The interesting comparison point between the FTX round and the Revolut round, Revolut had Tiger Global and SoftBank in the round.
Yeah.
You look at the FTX round, it's everybody in the crypto space.
Okay.
Right? Not everybody in the crypto space, but all of those investors in the venture investors in the crypto space. VanEck was also in there as well. VanEck are a traditional ETF manager in the US who have been trying for a long time to get a crypto ETF through the SEC. They will eventually, I firmly believe that, but they're big believers in the space, which is great to see. I met them years ago in New York City on a tour, and they seem pretty traditional. They've moved along the curve quite a bit. But I think, again, this is just the gross tonnage of dollars and coming back to adding up all of the fintech private market valuations out there right now. It's probably upwards of 500 billion right now instead of the 400 billion I've been quoting for the last few months.
Yep.
Compared to the public market cap of 4 trillion just for financial services firms in the US, right? That's a lot of upside to go, right?
Yep.
To get from 400 or 500 billion up to 4 trillion. And I think that's what people are recognizing here. And that is why 1 out of every 5 venture dollars in the first half of 2021 has gone into fintech. Fintech's on fire.
It is, and I think people are genuinely starting to see the overlap now, that it's not pure financial services. There's been that crossover into tech and cross back over. And I think people are just seeing that there's a lot more opportunity and potential, especially on the infrastructure side and trying to help things scale, obviously with the potential scaling of the crypto market in terms of where that ends up with stable coins and all these other things I don't fully understand. But, the huge potential for that. And then you see the huge potential for obviously a new way of banking and the future of money and everything. So I think a lot of the investment is going into that and is betting on the future of it in a big way.
Absolutely. So. And that's why I love the space, is just this crossover, and the crossover specifically between fintech and crypto, or fintech and broader digital assets, and where this is all going. Saying recently that in 2014, I read the Satoshi Nakamoto white paper. I got on a non-stop flight to the next frontier of money, and I've been on it ever since.
That's it.
Because it's way more than just a cryptocurrency conversation here. It's about the true digitalization of finance.
Yep.
Anyway, that's my soapbox. Anything else you wanted to point out to myself and others this fine evening?
No, not specifically. I think we went deep on a few topics. I'd actually, I'd love the chance. I really enjoyed this session, so I'd love the chance now to look at some of these ones in more detail on the future, where somebody, like we talked about Nubank. I mentioned Tinkoff. Tinkoff is a fascinating business that, again, doesn't get a huge amount of cover, but it even has its own logistics business within it. I mentioned that before. Like, there's some that I'd love to do a deeper dive on, and write up a bit more to see where is it leading to. No.
Well, let's do it. I'll put you on the spot then. You're going to have to do that.
Yeah, that's fair enough.
Well, we'll definitely do Nubank, and we'll definitely do Tinkoff.
Yeah, I think so.
And, I think there might be a stablecoin discussion in there as well somewhere.
Yeah.
But we'll see.
Yeah.
All right, pal. I think we'll leave it there for this evening.
Absolutely. Yeah? It's getting dark here behind me. So.
Good. I'll talk to you.
Talk to you.
Adios. That does it for this week, folks. And you can learn more about the stories we covered in the show notes on our website, moneyneversleeps.ie. So check us out online and subscribe to our Money Never Sleeps newsletter as well. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm the founding partner at Noria Ventures, and I'm an early-stage startup advisor and investor helping fintech and digital asset startups get their product to market, build traction with customers, and raise funding. If you'd like to talk to me about your business, get in touch at pete@norioventures.com. Finally, till next time, thanks for listening. See ya!
Money never sleeps, pal.